Hello, everyone, and welcome. How are you?
Good, thank you.
Beautiful. My name is Ezio Pavoni. I'm with Significa Short Sales, and we were invited here today to talk to you about what is going on in our country today about short sales and forbearance and so forth. And I'd like to first of all thank Keller Williams in Connecticut for inviting us here to speak on that behalf. And I'd like to thank also our short sale director Bogdan, who's on this Zoom call today, for having us here as well.
Thank you.
So before we begin, what I'd like to do is kind of get acquainted with who's on the call before we start off with the training for today. And I'm sure you have lots of questions in reference to what's happening in the industry today, related to all the forbearances and the foreclosure and the moratoriums and so forth. So let's have you. We're going to go around the room and we're just going to get acquainted and just give me your name, how long you've been in the real estate business, and also a little bit about what you know about short sales and what you don't know about short sales. It's fine. Either way, it's irrelevant. So it doesn't make a difference if you have a 1-year experience, if you've done 1 transaction, or if you've taken on, doing 5 or 6 transactions. So let's begin. Who would like to go first? All right, so we see Carol. So just for the Zoom, so you can put your hand up, that's fine. Carol, go ahead.
Hi, I'm Carol Richter. I have been a realtor for about 4 years, and I've never done a short sale, so I would like to learn as much as I can.
Beautiful, I got that. And thank you for being on, Carol. Really appreciate that. Thank you. Who would like to go next?
I will. My name is Diane Seibert, and I've been in the business since 2016, and I have never done a short sale either.
Got it. Thank you. Next.
Alice Farina. I've been in the business for 17 years and I have done a couple of short sales, and I know they can be very complicated.
I'm sure they can. The guy got that. I'm just trying to work out something here I'm trying to see what is going on here because I'm trying to expand, but it's giving me in my screen here, it's giving me
Hi there.
my view. Go ahead.
Hi there. I'm Tama Murphy. I've been in real estate for 4 years, and I've had 1 sale of a short sale that ended up going into foreclosure because of timing. And then I've had 2 buyer sides.
Got it. I got that. So you've had some challenges with the short sales you've been a part of, obviously, and that's not
Right.
That's very common, by the way. It's not uncommon, Tama. So I just want you to know that. Thank you.
Hi, I'm Velma Taylor, and I've been a realtor for about 4 years, and I've done 1 short sale.
And how was that for you?
It was good. It was interesting. It was interesting, but I did enjoy it.
Got it. Beautiful. Got
Hi,
that. Next.
Carrie Lee Dickinson. I've been in business for 1.5 years and know nothing about short sales.
Got it. Okay. Excellent. Next.
My name is Stuart Gertz. Been in the business for 3 months and I've never had a short sale.
Got it. Thank you. Appreciate that. All righty. Next.
Hi, I'm Jerome. I've been in the business for about 6 months and I've purchased a short sale.
I got it. How was that for you, being on the buy side?
It was a horrific process that nobody knew anything about.
That's what we hear over and over. We hear that over and over again. It's very common to hear that. Thank you. I really got the roll of that about it's a horrific process. Well, we're here to obviously make it as smoothly as possible. Again, keeping in mind that they're never an easy transaction. So, welcome. Anyone else?
Hi, I'm Sheila, and I've been in real estate for a few years, and I have no experience of lately, but maybe 20 something years ago, I was in a transaction with the short.
Understood. Got that. I really got through all that. Thank you. And it was a short sale, right? The one you did 20 years ago?
Yeah.
I got that. And how was that for you?
It was actually pretty good because the bank was really nice and
they made it easier. They weren't as difficult as they are today, right?
Yeah. I hear bad horror stories now, so.
I got that. I got that one. Thank you. Thank you. Who would like to go next? I believe we got everyone.
It's Rick Scott. I just wanted to introduce myself personally, since we've spoken on the phone once, and I wanted to just say hi.
How are you?
In person. I'm great. I have been in real estate since the dawn of time, and and from a short sale perspective, back in the 2008 or 09 arena, we kind of shifted our business towards that. So I do have some experience there. And just wanted to let you know that in our offices, as you guys kind of talk through what you're going to talk through, in our
Mhm.
offices, as listing agents, you can certainly list a short sale. You just can't process the short sale with the bank directly without some level of experience or getting a short sale negotiator involved. So that is kind of one of the rules in our world, to protect the client, because we find that too often listing agents are just completely unaware of the specialty that short sales is. So just in case that's helpful to you to have in your head as you go forward, that is how we run our offices from the list side.
It's extremely helpful, Rick, because of the fact that you touched on something that's really important. And what you touched on is a lot of times the agents are not present to the fact that you can, create a litigation process through doing a short sale if it's not done correctly. So, and it creates a lot of havoc for both you, the agent, as well as the management of the office. So that's one of the reasons actually that how we got involved in Keller Williams was exactly that way. Was one of the offices here in Pennsylvania, a gentleman at the time owned, I believe, 7 offices. Now they have more than up to 12 Keller Williams offices. And the reason why we brought it in our company and we created this whole structure for short sales is because they had gotten sued. One of the agents gotten sued, and they took it all the way up through the corporate level, all the way to the owners of the brokerages. So so they said we need to protect ourselves and figure out a way how to do this properly. So I can really respect that decision, Rick, for you to do that, because it does protect the agents and everyone in the transaction when you do it that way.
Yeah, sure. Is that Mike Campo you're talking about?
Absolutely. You get it right on the That's right. As a matter of fact, this whole system was created in that environment that back in 2008, between 2008 and 2010, we created this whole system called the significant short sale process. And it was created in that with his original offices. Mm-hmm.
Awesome. So I'm just going to be here in the background in case anybody needs a kind of a Connecticut brokerage perspective on it, but just wanted to say hi.
Beautiful. And Rick, do me a favor. I just want to make sure that I'm able to share my screen. So so I don't have a break on here. I'm trying to see. I want to expand my full screen here. Okay, beautiful. Oh, there we go. So we got that fixed. Now I'm going to share. Beautiful. Anyone else? Did I miss anyone? Because I know people are still coming in. And I know Rick, you had mentioned before we started that you want to keep being the host until we had everyone on, right? Is that correct?
Yeah, that way you guys don't have to worry about the waiting room. I'll just take care of that for you.
Beautiful. So first of all, thank you. I just want to say thank you for taking care of that for us. All right. So did we miss anyone for the introductions? I want to make sure everyone had a chance to speak.
Hi, I'm Alex.
Okay,
And
go ahead.
I'm sorry, I came a little bit late
No worries.
getting it. I've been in real estate for 20 plus years, and I think I've done one short sale. It was so long ago, and it was a condo. And I worked with a workout specialist, and she was amazing. She totally handled it. Yeah, so that's and I'm looking into one at the moment, and I'm interested to hear what you have to say.
Got it. Beautiful. Fantastic. Well, we'll hopefully what we share will be of use for all of you. And I also wanted to make sure you're all aware that you do have a short sale director right in your office at Keller Williams. Bogdan is on this Zoom call. So if you have any questions, I know that I can see that some of you are posting, and I want to thank you all for being active and being completely interactive in this whole process. So I love that. So if you have any questions, what we'll do is we'll keep them for the end of the presentation. And anything that we can do, Bogdan, if you can take those down, any of the questions in the chat, I'd really appreciate that, so we can answer them as we go through it. And so that we're efficient and we can get to everyone's questions, what I'd like to do moving forward is if you have a question, just raise your hand, your digital hand. Is everyone comfortable? I'm sure most of you are comfortable being in a Zoom environment now. So please just use the digital hand and we'll answer any of the questions that you might have. We just ask that you keep your questions for the end of the presentation. So this way it gives us some time to go through the presentation and some of the slides. And hopefully going through those slides, that will answer most of your questions. Okay? Are we good? Beautiful. All right. So I am going to share my screen and we'll get the presentation up so this way we can start off with that. Okay? All righty. So as you notice in the first screen, so I just want to make sure, is everyone Just checking in. Can everyone see the screen that I'm sharing? Well done. Just want to check in.
Yes, we
Yes,
can.
we do.
We can. Beautiful. Okay, fantastic. All right. So that being said, the first thing we're going to talk about, usually the presentations we always do for all of the offices that we operate in is really geared towards short sales and only short sales. Obviously, as you all know, the environment we are in today, it's not only short sales that we're dealing with as real estate agents, we're dealing with forbearances, we're dealing with loan modifications, we're dealing with people who have a lot of equity in their property because of the increase in values, especially in the east, northeast section. In certain areas, not all areas have been affected by that. So today you're going to hear me using different terminology besides short sales. But again, this is always geared towards the short sale transaction, only because at the end of the day, that's what most of these things will lead to once they go into foreclosure. That will be the best option for them, okay? So today we're talking about the impact of putting your mortgage loan into forbearance during the COVID-19. Why are we focusing on forbearances? Anyone want to answer that question? Why do you think forbearance is the topic of the day for today versus short sales?
Because we're about a year away from when they started happening in 2020, and now they're starting to come up for payment.
Exactly. Excellent. Okay, that's exactly what's happening. So now they're starting to come up, right? So because now they're starting to come up for payment, what's happening is, as we all know, there are a lot of people who are still on unemployment. So there's going to have a direct effect to the real estate industry that we're in, whatever market you're in, right? Once these forbearances come up, they're not all going to be put at the back of the mortgage, right? There's different restructure payments for the forbearances that they're in. Okay, and some homeowners are not even aware that they were put in a forbearance without even being notified. You're going to have some, so that's why it's important for you as the agent to know that. Okay, not everyone applied for a forbearance. A lot of people got thrown into forbearance because of government intervention when it came to that. I'm not saying that negative or positive. It just was mandated by the government to put these people into forbearance. Okay, so that being said, so next we're going to share a few of the statistics. These are important because this gives us an idea of some of you might know that, Realty Track is a great source, by the way. If you guys ever want to find out any numbers related to your local area or what's going on in our country, I highly recommend Realty Track as a source. They also own a company called Adam Data Solutions, which gives you the detail. They're owned by the same entity. So Realty Track and both Adam Data are one and the same. But according to them, 2.7 million mortgages are in forbearance in the United States. So this is as of February 2021. Right? And that number keeps on going up higher and higher because as long as the moratoriums are there, that number is going to keep on going higher. Okay. As of February 2021, 13.5 million homeowners and renters were able to pay their full mortgage or rent. This is according to Adam Data, which is owned by Realty Track as well. Okay. You'll also notice that the number of cases somewhere in the foreclosure process would shoot out. This is what they're forecasting. Okay. This is not data. So I want you to really be present to that because I will tell you what our actual numbers and what they're forecasting. So this is a forecast that they're saying that somewhere in foreclosure process would shoot up more than 100% from current level of about 145,000 to roughly 336,000. That's just in the second quarter of this year. Okay. Now those numbers might be skewed. Why do you think those numbers might be skewed? What is going on right now in our country? There are extensions that are going on. So I want to make sure that we have a real to date conversation versus a pie in the sky type of conversation. So why that would be skewed is because of the fact that what's happening is if the moratoriums keep on being extended, right, those numbers are not going to come to fruition in the second quarter. Why not? Anybody want to take a stab at that? Why do you think they would not come? Why do you think there would not be an increase in foreclosures if there's a moratorium and it gets extended into 2022?
The courts are closed.
That's right, exactly. So there's no way for them to process it. Doesn't mean that those foreclosures are not there. It just means that they can't legally start a new foreclosure file because of the moratorium. So just because the moratorium doesn't mean that those people are not going to go into foreclosure. It's just delaying it. I call it putting the Band-Aid, right, versus doing the operation. So that's what's really happening right now. Okay, any questions on that so far? Just want to I'm going to keep on going quite quickly here through these slides so we can get to the questions and answers afterwards. This statistic is a little bit different. This breaks it down now into the different government agencies, right? The Ginnie, the Fannie, Freddie, right, and other different portfolios that manage mortgages. Okay, so if you look at this one here, what the current foreclosures in America, stats show that 1 in 11,396 properties as of March 2021 were, right, in foreclosure, right, the properties, the foreclosure filings. Now, what's starting to happen is an increase that's going on, right? As you all know, right, it's going up every month. It's going to start to go up, right? As you know, some of the courts are starting to open up. Like we noticed here in Pennsylvania, some of the court systems are starting to actually file these, for not just file them, but they're actually starting to push these foreclosures through. Well, before January this year, that was unheard of. They were completely closed. So as of January this year of 2021, you have some of the court systems that are actually pushing some of these foreclosures through. Okay, now unemployment, the good news is that unemployment is starting to go down. That's the good news. Okay, as you notice that there's from last year to this year, there's been a drop in that. Okay, now if you want to read the statistic, you can see here, if you look right at the graph itself, right, it went up, right, it spiked. If we're looking at, this is Fannie and Freddie, right, it went up to 6.4% and now it's gone down. So actually this is good news for that, right? The second one, if you look at this one here, this is the total one from 8.55% and it's dropped down to 4.96%. Okay, so they're all on the decline. They went up and now they're all on the decline. So which is good news. That means that the amount of filings are starting to go, they're starting to go down, only because, again, why is that? Because they can't file. You get that? So it's not because they're not there, it's because they can't file. Okay, so it talks about ugly statistics no matter which way you look at it. Next, this is local to your counties in Connecticut. So just out of show of hands, what counties do the most of you operate in? I just want to get a sense of 2 of those counties. Which are they, Kimberly? Which ones are they?
Sorry, New Haven and Fairfield County.
New Haven and Fairfield. Beautiful. Is that where most of you operate?
And Litchfield.
And Litchfield. Okay, so let's go through some of the numbers quickly. So this is as of March 2021. Again, you can get updated numbers sometime, like probably the next couple of weeks. They'll have the numbers out for the month of April. As of right now, these are the most current numbers we can get for your local area. So as of March 2021, we had 2,298 properties for foreclosure filings, right? So now that you're going to start to see that number go up again. It is being slowed down by the moratoriums. Okay, so if you break that down, it's broken down in Fairfield County. You have 478 were filed as of March. In Litchfield, am I pronouncing that correctly? Litchfield County, 156. That's a little bit lower. New Haven, 617. I'm just going to move the slide over so I can see it properly here. Sorry about that. We have Hartford, 604. We have Middlesex, 117. New London, 148, and Wyndham. So obviously the leader right now, county-wise, is New Haven's got the highest amount. Would you agree with that statistic so far, with what you're seeing in your local markets? Yep, beautiful, good. The reason why I'm checking in with you guys, because I always ask what you're all dealing with in your local market, because when you guys are in the streets, you guys have boots to the ground, right? Because you're talking to the homeowners all the time, right? It's great that Realty Track can gather this information, and it's true, but again, at the same time, you get the sense of, hey, what's really happening in my local market? This really gives you a sense of what's going on. And I want to confirm that this is actually what's going on, okay? Now let's talk about forbearances. This is the main topic today, obviously, because we have a lot of homeowners are in forbearance in our country, and just want to give you a description of what it is. It's written right there, but basically a forbearance is just when a mortgage servicer allows a certain amount of payments to be put off for a certain amount of time, okay? Now, that, again, as we said before, the forbearances are either a request from the homeowner. Sometimes in the situation that we're in because of the pandemic, they're actually being put into forbearance without them even knowing about it. Okay, now what's important about this is the different type of repayment schedules. What happens is, we all talked about that at the beginning. We said, okay, hold on a second. What's going on about the repayment? Because that's going to be the important part. Come June, if for example, if the moratorium is not extended past June, right now they have it until June, July of this year. okay, of 2021. If there is no other stimulus package that's gonna, and there's talk of one, that's why I'm saying you're gonna we have to kind of play by ear, because we have to see what, the government's going to do with this. But again, if we go by what we know today, right, in May 6th of 2021, as of today, the moratorium will end as of June, the end of June, or in July of 2021. So if that's the case, then we'll start seeing some of these forbearance repayment options come into play. There are 3 different ways that people can structure their forbearance repayment plans. One of them is a balloon payment, right? One full payment at the end of the forbearance. So someone's behind, someone to make payments for 12 months at $2,000, they would have to make a payment of $24,000 after the year, plus their current monthly mortgage payment. Okay, that's a balloon payment. The second one is they were restructured over a period of time from the end of the forbearance period. So for example, they'll turn around and say, okay, we're going to restructure your forbearance payments, what you're behind on, over a 5-year period. So they take the amount, let's say it's the same $24,000, just to keep the same example, and they would amortize that over 24 month or a 5-year period, which would be a 60-month period for them. Okay. And the third way is where they would put it at the back of the mortgage itself at the end. So let's say the mortgage ends in 2040, they're going to add the payments to the end of 2040 and then just amortize that. Again, that one is, they try to stay away from that because sometimes that creates a negative amortization when they do that. Okay. So any questions so far with what the forbearance is and the repayment plans that they have?
Is there a tax benefit for them to put it back? I mean, like if they don't pay it up front and they put it at the end, do they get a credit for that? Or is that counted as income?
So I do not know that answer, only because it's not counted as income because they owe that money, right? So it's not, so obviously it's not counted as income because it's a debt that they owe to the mortgage. That answer I do know. The tax benefit, I would not be able to answer that. You would have to reach out to a tax accountant or an attorney that does taxes that would be able to help out with that answer. So
Thank you.
You're welcome. Deferment. This is another choice. You don't need. This is not something that we heard of for obviously in this situation during the pandemic, because a deferment is when a series of payments are skipped and they're put at the end of the mortgage. So that's really a forbearance that's put at the back of the mortgage. They have a specific name for it. Okay. Again, it's called a deferment because they completely defer. Let's say someone misses a year of payments, right? Then they take that whole amount and put it at the back of the mortgage. Again, deferring payments are not the best solution, again, because it could end up creating a negative amortization in the mortgage recalculations. Okay. Next, modification. So modification is a scenario where it's a restructuring of the actual current loan. Sometimes people will call it as if they got refinanced, but it's really not a refinance. They actually take the same loan that they're in, the same mortgage, and what they do is they restructure, they remodify it. Usually when they're remodifying a loan, what they'll do is they'll put the homeowner through a 3-month trial period. They'll say, okay, they'll calculate their income and expenses, and according to their income and expenses, they'll readjust. Either they'll readjust the interest rate, or at times what they'll do is they'll readjust the principal. They can do 1, 2, or 3 different ways: a reduction of principal, a lower of interest, interest on the actual mortgage itself, or a restructure of the time frame. Those are 3 different things that they look at when they're remodifying a loan. Okay. Again, it's not a new loan; it's the existing loan that they have, and they restructure that. What they'll do in that situation is they'll have the homeowner qualify. They still go through a underwriting process for a modification process. So it's like going through getting a refinance or getting a brand new mortgage loan. Okay. They have them submit all the paperwork, the same criteria. Next, credit reporting. How does it affect? Well, as you all know, we've heard a lot of mixed reviews about reporting, especially for the forbearances. Well, this is the last information that we have, according to all the write-ups that we scanned through, is that the government has mandated that they do not report for forbearances or the deferments, that they will not be reported to the credit agencies as late payments for the forbearances. So if someone's asking you, you can pretty well be reassured that they're not going to be reporting that. Okay, so again, in normal circumstances, if we're not in a pandemic and someone was requesting a forbearance or deferment or loan modification, that would be reported to the credit bureau agency. In our current condition, they're not being reported. Okay, again, we've been hearing, we hear about it, see right there. It's possible the mortgage service may report that payment that were made timely, but again, it's not, right now, they're being told not to report them as late. Okay. A short sale. So let's talk about a short sale quickly. A short sale. So let's say what ends up happening. The reason why we put the short sale towards the end of all the you know, of the forbearances, deferment, and so forth, and loan modifications, is because what ends up happening is most of the times, out of, you know, over the 15 years that we've been short sales across the country, we've noticed that most people that go into loan modification or forbearance or a deferment tend to fall right back into not being able to afford their mortgage. Okay, because sometimes it's not the, see what the banks said it beautifully. It's not the property that is distressed, it's the homeowner that is distressed. So it could be a medical situation, it could be a you know, loss of job, it could be divorce. So any one of those situations can spin a family's finances, you know, going down the drain, right? So because of that, what ends up happening, it's not the property that's distressed, but it's the actual homeowner. So if the homeowner goes and let's say files for a loan modification or you know, applies for a forbearance, what ends up happening inevitably in most cases, they end up being where they can't afford the mortgage payments on the property anyways. So it leads to a short sale. So the reason why I'm sharing all that is because you might be talking to some homeowners that are in forbearance, and chances are if you follow up with them in the next 3 to 6 months, they're going to become a short sale. Why would I say that? Anyone want to take a stab at that? Why I would say that chances are they're going to become a short sale?
Well, because most people who don't have money to pay the mortgage now don't have 6 or 8 months of mortgage payment later to catch up on.
Well said. Absolutely, exactly. Even if it's right. So if they increase, even if they do a, you know, a restructure over a 5-year period, it's still going to increase the amount of money they have to pay. Right. So even if they put at the end of the mortgage, it's definitely not going to go lower. It's definitely going to go higher. There's no question about that. So if they had a hard time making the previous payment, what are the chances of them having now, you know, of them making the current payment would possibly be higher. So that's what we're talking about. So a short sale is really when a financial distressed homeowner sells the property for less than what the property is worth, right? So what ends up happening is usually their mortgage is higher than what the property is worth. Now, you're going to have a situation in today's market in certain areas, not all areas, where that's not the case. Why? Because of the rising prices in our country right now with real estate, a lot of homeowners at this present time have equity in their property. So there is a possibility that you might be able to sell the house without doing a short sale. In most cases, that might not be the case. It's not all counties that will be that way. Some counties will be that way. Some counties, the prices have not gone up as much as some other counties. So you want to make sure that when you're talking to a homeowner, you want to ask them about if they have a payoff of what they owe on their mortgage payment. That will let you know right away, right, what their current situation is. And chances are they will not know. They won't know that, you know, that there were recurring costs. For example, if somebody missed certain payments, you might have homeowners that might have been behind before the pandemic started, right? And then they were put in forbearance and think, okay, now I'm okay. Well, forbearance or deferment or a loan modification doesn't mean that you don't have to pay back that period of time that you didn't pay the mortgage for. In all cases, you have to pay that money back. Okay. And with the situation with the unemployment, some people still don't have that income, or like you know, we so eloquently said that they don't have the money to be able to make those mortgage payments that are going to be coming up after the moratoriums are over. All right. Forbearance, deferments, and modifications should be the last resort options. Why is that? Anybody want to? Why would we say forbearance and deferment and modification should be a last resort option?
Because of the hit on your credit report and ability to apply for a new mortgage later on?
Absolutely. Excellent. That's right. Absolutely. That's right. Now, keep in mind, Kim, as well said, just to keep in mind that now during the pandemic, there is no hit in their credit. So they're fortunate. Yet, the mindset is of homeowners when they get in this situation, what they tend to do is they get conditioned to not paying their mortgage for 12 months or 16 months. What do you think is going to happen July 1st or August 1st, whenever the moratorium is over? What's the first thing that's going to happen? When all of a sudden now they have to make that $2,000 payment, which is now going to be $2,500 or possibly $3,000 a month.
Now they have to reshuffle because they've already taken that money and paid it for other things. Now it's going to be a complete shock to their budget because they have to figure it out.
Exactly, right? And they're not going to be prepared for that. Even if they're back at work, if they're on unemployment, whatever the situation is, that's not going to be part of their budget because they got used to spending that extra $2,000 or $3,000 a month because they were in a forbearance. Right? So you want to make sure that when you want to have that conversation with the homeowners when you're going on a listing and be able to really see, because most of them, the minute they say, I've been in a forbearance for a certain amount of time, the first thing you want to do is find out what their payoff amount is. That'll give you access to how to deal with the conversation. This is a great little slide here. So forbearance lets you skip some or all of your monthly mortgage payments for as much as a year, where we're at the past the year point now, and obviously we're still going with some of these forbearances. But forbearance should be a last resort, something to avoid if at all possible. Why? Because while it can be a lifeline in a short-term situation, forbearance will undoubtedly lead to credit issues down the road. Well, okay, so that's, again, in this pandemic, it's not the case because they're not going to be, they're not going to allow the mortgage services to report them as late. Again, doesn't mean that the servicers themselves, doesn't mean that the credit reporting agencies might not report late themselves. So we have to be very careful about that, right? We don't know what these agencies are going to do on their own, okay? But more importantly, really what it is, it's a lifeline. More importantly, is the fact that they still owe that money. That's why it should be a last resort. Because a lot of times people think, well, I didn't pay for 12 months, so that money is just that amount is just gonna disappear. That's not the case. You really want to be careful about that conversation. Again, forbearance doesn't mean your payments are forgiven. This is the mindset of people. They think that their payments are forgiven or erased. They're still required to repay any missed reduced payments in the future, which in most cases will be repaid over time at the end of the forbearance. Again, the servicer, they have to negotiate how that repayment structure will look. It's not just like taken for granted. Okay, they're just going to put it at the back of the mortgage. No, the homeowner has to have that conversation with their specific lender on how they want to restructure their forbearance payments. Okay. Again, currently foreclosures and evictions have been suspended until July 31st, 2021. We added this slide last week because at first it was until June, but now we found out it's being extended until July 31st, 2021. Okay, again, and there's talk about another stimulus package. Just in case some of you is anybody aware of what's going on with that? Because there's a lot of talk about that they're going to be extending into 2022. Does anyone have any data on that? It's a conversation that's out there, but there's no facts backing that up right now. Right now, the only facts we know is as of July 31st, 2021, the moratoriums will end. Anybody hear anything different? You're more than welcome. Please share if you've heard something different.
Well, if you haven't, just wait 15 minutes.
You're right. It's true. It's true. Well, listen, I did hear, I'm not sure if I can bring the slide up. I'm gonna see if I can share something else. Give me a second here. Let me just finish with this because I want to share what I'm sure we all saw from National Association of Realtors yesterday that the judge passed that the eviction moratoriums are going to be over. That it was unlawful to even have that. So that's going to definitely end. That there's no question about. For evictions, not necessarily. So we don't know where we stand yet for the foreclosure moratoriums. We do know that the evictions are gonna stop. So there's no longer going to be a moratorium for eviction. So people that haven't paid their rent, that are behind with their rent, are going to have to catch up now. They have this is it, I believe. I did when I read it, there was no, I did not see a date of by when they were going to enact that. I just know that it was passed yesterday, but I didn't hear if it was going to end in June. I'm presuming that it's probably going to end in June because that's when it was originally slated for it to end.
Well, and the judge who made that ruling as of this morning put a hold on that ruling so that the DOJ and the plaintiff who brought the case could present more arguments. So it's, again, it's as of this morning, it's back in place the way it was. And, you know, who knows what's going to happen over the next couple of days and weeks. We'll probably know by the end of May, which brings it close to the normal
June.
date
Yeah,
anyway, right?
my sense, Rick, you're thinking the same thing. Your sense is it's probably gonna go on until June, where they had the moratorium slated for originally, and then just drop off at that point. That's the sense I'm getting. If we're already in May, you know, June is not right around the corner. So beautiful. All right. So general repayment of forbearance occurs in the amount being repaid. So we talked about this already, right? So we talked about one lump sum at the end of the forbearance period. So they have to come up with the money. Number two is they added to their existing monthly payments over whatever 5-year period, depending. Again, this has to be negotiated on an individual basis with their mortgage lender. And number three, added at the end of their loan, which is also known as obviously as a deferment, okay? As a lump sum. What should I do when going on a listing point? This is really important for all of you, because this is where you're going to find out if it's a short sale or not, okay? And how to best, obviously you want to guide them. And if an informed agent, really what ends up happening is the more you are informed about what's going on, the better you'll be able to service your clients when you're talking with them, okay? So number one, questions you want to ask your sellers on a listing appointment. If a client has a mortgage, you want to find out if they were unemployed during the pandemic. Why is that important? Because you want to know what their financial situation is, right? Whether did they put their mortgage in forbearance? Now, they might, again, I remember I stated at the beginning of the presentation, I said, they might not have requested a forbearance, but the lender might have automatically put them in a forbearance. So it wouldn't hurt to even get on the phone with the lender. It takes about, well, it used to take maybe 15 minutes. Now it could take up to an hour or two, only because they're not always available to take the calls. So because of the situation. So just be present to that. But I wouldn't hesitate putting a call into the lender to find out if they were automatically put into a forbearance. Okay. Number two, if they were put in a forbearance, you want to notify their lender and get in touch with them on a regular basis, right? Why is that important? Because they want to know, well, how are you going to restructure my forbearance? How, what, what's going on, right? Okay. Number three, have they received any paperwork or documentation about their forbearance? Right, some homeowners, listen, they might be sending in their mortgage payments, and I've heard of cases where they sent in the mortgage payments and they're being refused because they were put in a forbearance. So meaning they found out afterwards. Yes, it's so that's why check in with them and get on the phone with the lender. Okay, number four, have they started making up the missed payments as of yet? That's important, right? Because that affects, right? If you're looking at selling the house and they have, $50,000 worth of forbearance in arrears, is that going to affect the sale of the house? Absolutely. Right. And they need to know, right? If is it being put at the back of the mortgage? Is it being worked out over a 5-year period? Because that affects the amount of the repayment.
Enzio, I have a very simple question.
Sure, go ahead.
Often the bank will not have a conversation with anyone but the mortgage owner.
Absolutely, not often. Always. No one else can get. You have to be authorized. That's why I recommend you do it with them while they're there, because they can give you a verbal authorization right then and there.
Got it.
Does that answer your question?
Yes, perfect.
Yeah, absolutely. Yeah, that's why I recommend. That's why sometimes you might get lucky and you might get the bank on the phone right away, or you can do it as a conference call at a later date. You can set up that appointment with the homeowner. Say, listen, before we take on the listing, I just want to make sure that we know what we know all the facts, what's really owed, what the payment, what the actual payment is, your balances on your mortgage, if it's been in forbearance, what the restructure is going to look like. So, and they don't mind that, because they might not know what they don't know. So they actually appreciate you giving them all that information, and chances are you'll get the listing because of that, because of all the knowledge that you bring to the table. Okay. Again, so then you want to also find out, are they selling or buying? If yes, make sure you have them pre-approved prior. Obviously, no, that goes without saying. You want to make sure they're pre-approved, right? You want to make sure their credit has not been impacted, right? Again, because of the forbearance. But keep in mind, during the pandemic, they were not reported late, but you just want to double check that, just as a safety net. Already upside down, that's where you're gonna find out when you get when you find out what the payment is, what when you request the current payment of the mortgage, they'll send that information out usually within 7 to 10 days. At that point, you'll find out if the property is upside down or not. Okay. You may want to request a mortgage payoff, which we talked about already, because that's going to give you the final amount. Just to give you an example, I was talking to a lady this week in New York, and her mortgage statement stated that she owed $295,000. Her payoff amount is $397,000. So how does that affect your listing? Well, think of it for a second. The difference between what her mortgage statement said and what her payoff amount was, there was a difference of $102,000. Imagine if you walk into a listing and you turn around and say, they say, what do you owe on your property? Oh, $295,000. And you list it for $300,000. Then you find out all of a sudden the payoff amount is $397,000. You have a problem? A big problem, right? Because then you're gonna have people making offers at 250 or 275, and the balance is 397. Okay, so you want to find out right away. That's why it's important to get the payment, the payoff amount. Number 3, if they are upside down, you may want to talking about a short sale. So if they're upside down, immediately what you want to do is you want to bring in Bogdan or myself, our company, obviously, to do a consultation. There's a free consultation. It doesn't cost you anything, and you're more than welcome to be on that consultation. We go through a series of 30 to 35 questions, depending on the state that we're operating in. And in that consultation call, we basically establish if it is in fact a short sale. And if it's not, then we'll tell you, we'll share that information with you. And then at the end of the consultation call, we'll guide you on how to handle the transaction in the best manner for the homeowner and for yourselves as a listing agent. Okay, but at that point, it doesn't cost you anything, as I said before, and it really does give you an edge as a listing agent, because now you not only are you sharing the information about the deferments and about the forbearances, but you're also bringing in a short sale expert via significant short sales and Bogdan. Number 4, if they have equity, then there's still time to sell their home. You might find out after you get the payoff that the property is worth 500,000 and they only owe 397,000. You're still good to go on that. Okay. The key is to be prepared. You don't want any surprises. That's really what this presentation is about, right? A little bit of more legwork at the beginning could make all the difference in a successful outcome. All right. Again, give us a call. Bogdan's right in your office. You guys are fortunate to have that. Or you can give me a call. I'll share my information in the chat as well. But we're always here to help. Listen, it doesn't, that's our whole business is built on being a strategic partner for you guys as a real estate agents. That's really our whole business model. Okay. All righty. So that being said, as we move forward, you find yourself in a short sale situation with your sellers, give us a call. We have, obviously, we've been in the business for 15 years. We operate primarily, up in the 4 northeastern states of Connecticut, New York, Pennsylvania, and New Jersey. So we have, short sale directors in all those states. Some of those states have multiple short sale directors. So you can reach out to Bogdan, you can reach out to myself. We support a lot of Keller Williams offices, and so we're very used to the business model. I am myself a Keller Williams agent in Pennsylvania in the Bethlehem office. So, I really understand this whole business model was created out of the KW model. So we speak the same language basically. And then that's it. So, more on the system coming depending on how your market continues. We're going to update you because as Rick so beautifully mentioned before, that the next 15 minutes we'll have a different slide. That's so true, right? We don't know what we don't know. So we don't know how that judgment's going to come down about the evictions or about the moratoriums for the foreclosures. And that's it. Thank you for attending our class. I would like to really open it up for questions. Again, please, if we're going to, let's do it with the electronic hands. So this way it makes it easier for everybody. I'm just going to expand give me a second. I'm expanding it to full screen here. There we go. Beautiful. Okay. Who has any questions for us today?
There's a question in the chat room.
Oh, beautiful. Okay. Yeah. Thank you, Bogdan. I really appreciate that. Thank you so much.
Will we be able to get these slides?
Absolutely. As a matter of fact, they were sent out to Bogdan already. Bogdan, if you'd be so kind to put your email right in the chat, Bogdan, are you?
I'll actually share it with Rick, and Rick can share it.
Perfect. There we go. Absolutely. There you go. Mhm.
He has the master distribution list.
Okay, perfect. Does that, so thank you. Does that answer that one question? Any other questions? I said something about my birthday. Hold on a second. I want to make sure we don't.
And she has another question. Will the lender be able to disclose this and view of information?
So I just want to, so who asked, so I just want to make sure that we answer
Olena,
it.
if you can re-ask the question, that'll be great.
Go ahead, Olena.
Olena, are you there? You might be on mute.
Hello, am I mute?
Yeah,
Hello?
now you're not. Now you're okay.
I'm
Now we
sorry.
can hear you. Go ahead. No.
Okay. 3 earpieces and I don't know where it goes. So I think that question was kind of answered, but Alex asked the same question because I was surprised when you said call the bank because I have hard time calling utility company to find out how much I owe for the phone. Like not alone saying like how much the neighbor owns for the mortgage. So I think we're good.
Olena, thank you for the laugh. That is so funny. Today you can't even get your utility bill servicer on the phone. I got that, let alone a mortgage. Yes. So we used to experience long wait times before, like before the pandemic, our wait times would be like, 15 to 20 minutes. Now it's not unheard of to have, to be on hold for about an hour and then get disconnected. So I'm just letting you know in advance. It's not to discourage you. That's what you might be up against. So if you're at a listing appointment, what I would recommend you do is give it a quick try to get on the phone with the bank if they're confused about what their payoff amount is, or if they were in a forbearance or not. And then once that happens, if you find that you're on hold past the 5 minutes, I would just recommend say, listen, why don't we do this? Why don't we move forward with taking care of what we have to take care of today, and then we'll schedule a specific time where you can do a conference call with them. And just this way you'll have, you could be in the comfort of your office or your home, and you're not restrained by the time limitations, because it could take a long time sometimes. Okay. And the other recommendation, that's a great question, because I also wanted to share this with you. The best times to reach out to them is first thing in the morning or at the end of the day. So if their servicing hours, let's say you're dealing with the Bank of America or SLS or SPS or Ocwen, whichever one it is, you find out their servicing hours are from 6 a.m. to 5 p.m. or 8 a.m. to 5 p.m. I would either call first thing in the morning at the 6 a.m. mark or at the end of the day, right before the 5 p.m. Not too close to 5 p.m. because they'll just put you on queue and then close up and never take your call. So like, if it's a 5 o'clock, I would do like around 4:30. Okay. I hope that helps.
Kimberly and then George.
Question, is there someone on your team that speaks Spanish?
Absolutely. Yeah, so we can do Spanish translations, no question about that. And Bogdan has said to us that he's willing to go to the Spanish school, so to help you guys out. Is that true, Bogdan?
Yes, I did some Spanish in high school, but I have to refresh my Spanish.
But if you have any Romanian clients,
yeah, if you have any Romanian or French, I can handle those two languages.
Yeah, we do have someone on our team that speaks Spanish, so absolutely we can help them out. No question about that.
Ezio, George here. Quick question. I was 10 minutes late, so I apologize if you addressed this up at the top of the class. But your fees, how did your fees factor into the home seller?
So our fees are paid by the buyer. So the seller does not pay any fees to us. So we structure our payment on the buyer side of the transaction, because over the 15 years, we've realized that lenders don't want to see that fee on the seller side because they pay for the commission, they pay for all the closing costs. So we put it on the buyer side, and we'll put it in.
I'm sorry to interrupt you.
2%, absolutely. We'll either do it as a seller credit, or sometimes we'll do it as a reduction in the offer price. So that's a great question, George. So for example, I'll give you an example. Let's say we're dealing with a transaction that's $400,000 and our fee is 2%. So that would be $8,000. So what we would do is we say, request the bank, because banks will give you up to 3% of seller's assist. Or, I might be using the wrong term. Is it, do we guys structure it as seller's assist or?
Yeah, accredited closing.
Yeah, credit, exactly, same, yeah, so same line. Just wanted to make sure that I was answering your question, George. So what we'll do in that situation is we'll either do a credited closing, for that same amount or more for 3%. We'll make that request from the lender, from the bank. And then they pay us the 2% out of that, or a reduction. We'll say, let's say the buyer wanted to make, his offer came in at 400, right? Then we say, okay, just make your offer at 392 to account for our fee as well.
Got it.
That's only two ways. There are other ways, but those are, you know, those are the two easiest ways of doing it in the transaction. Mhm.
Got it. Thank you.
You're welcome.
Ariane?
Hi, everyone. I'm Ariane. I am an attorney, and I actually share office space in Keller Williams on the 7th floor.
Welcome.
And so in my 20 years, I've done a lot of short sales, but it has slowed down a lot, obviously, in the last couple of years. But as you were saying, we might see that up, we will be seeing that uptick. But so I just making some suggestions that I have seen on the attorney side that might be helpful. And one is to make sure to put it as a contingency on the binder, subject to short sale approval, because you do want to make sure, obviously, that it is covered in case an approval doesn't come through. The other thing is to advise the buyer or your client to please have patience. These things do take time, and we do not want a buyer to pull out before the offer is finalized. So that is one of the biggest things, is to give them a reasonable time frame of expectation. Sometimes the buyers will structure it to say that they can pull out after a certain amount of time. Just make sure it's a reasonable amount of time. And what have you been seeing time frame wise?
So what we do is we usually put in a minimum of 90 days to make sure that the buyers are are committed for at least 90-day period from the time that we get the executed offer. So for example, if we're in negotiations for a month or two, that time frame does not count. So once the negotiations are complete and the agreement is executed by both the seller and the buyer, then we'll put in a contingency of that they have an extra 90 days for us to negotiate the short sale. And then obviously once we get that's for the approval, and then once the approval is issued, then obviously it's up to the buyer to determine if it takes 30 days or 45 days if they have a mortgage, or depending if it's a cash transaction or they need to get a mortgage.
Great. And the last comment I was going to have is to kind of feel out your seller to see if there's a possibility that there could be other liens on the property that have to be addressed as well. There's judgment liens that, unfortunately, when they get filed on the property, do need to be addressed, even if the client has declared bankruptcy and thought it was all taken care of. If it's on the property, it still needs to be addressed. And so just feel them out to see if possibly there would be. And as an attorney on my side, what I do is sometimes look at the land records quickly just to get an idea, to see what may be showing up on a title search. Because the last thing you want is to get a title search from the buyer's attorney, a couple of weeks before closing, and all of a sudden there's these things to address. So
absolutely, no question about that. Yep, I agree with you 1,000% on that. As a matter of fact, what we do, and I'm glad you're on this Zoom training today, because we usually have, for every office that we work with, we usually bring in an attorney for every transaction. So we obviously would like to have a conversation with you afterwards to structure that as the need arises, as these short sale files come in. So.
Wonderful. Well, thank you. This is a great presentation.
Yeah. So because you want to make sure that, listen, we operate in different states, so we don't know the legalities of the state, the state specific legalities. So we always, that's one thing, for protection of ourselves, and more so for the agent and the homeowners and the buyers, we always make sure that we have an attorney present, only because it creates that security blanket for everybody.
Alex?
Thanks. So apropos that question, will you include that in your consultation in terms of other liens on the property so that we can get a clear picture of whether or not?
Yep, that's part of the 32 questions we asked, and that's already part of that.
Okay, so that's in there.
Yep, that's right. That's in. We have that part of our short sale consultation call that Bogdan or myself or any one of the short sale directors from our organization will go through with the homeowner. And I promise you, there's nothing that's left out of those questions. That's why there are 35 questions in some states. Yeah, excellent questions, by the way, guys. This is really great questions. I love it. Continue. Anyone else?
I've got one more quick one.
Sure, go ahead, George.
So when you're pricing these properties, as you know, I see pricing all over the board when it comes to a short sale, pricing it, putting it out on the MLS. What do you recommend with that?
We usually recommend it at about 10% below market value. Because the lenders will not allow, because there were days back in 2008, 2009 when we first started the process for short sales in this whole system. We'd have people come in with offers of 50%. Now, some of them did go through back then because the banks didn't have a structure for the foreclosure avalanche that happened back in those days, right? But I guarantee you, banks now have every single step of the short sale process down packed. So they're gonna do not only one, sometimes they might do one BPO and then an appraisal, depending if it's a Fannie or Freddie. So you might end up having multiple evaluations of the property throughout the short sale transaction. So there's no way that they're gonna take like 40, 50 cents on the dollar anymore. So at the most, maybe 10 or 20 cents. So what we recommend is if you start off at 10% below market value, it gives you some negotiation room.
Got it. Thank you.
You're welcome. Anyone else? This is fantastic. I love it.
Yeah, another question. I don't have much experience with short sales, so it might be a weird question, but still, does appraisal has any role to play in the appraisal? Because I think I heard that the short sales cannot sell under appraisal like a certain percentage under the property appraises for. Is this true? Is it rumor? So
absolutely, very, very true. So what ends up happening is the banks, so in a short sale situation, there is obviously the buyer is going to do their evaluation, because if they're getting finance, if they're getting a mortgage, the mortgage company is going to want to obviously have their own appraisal of what the property's worth. More importantly, the lender on the seller side will also do their own. They'll do one or two things. They'll either do a BPO, a broker's price opinion, or they're going to do a full-blown appraisal on the property. So, and if the offer is not close to that, it will not go through as a short sale.
And quick question.
First of all, I want to make sure that answer your question, because I just want to make sure that
it does. But still, if the buyer is bringing cash and they don't kind of need any appraisal, will the bank do appraisal anyway?
Absolutely. On the seller side, yes.
At what stage of the process do they kind of do it, before you list or after, or at what stage of the?
Well, so the banks will only do a BPO or an appraisal once they know that the homeowners applied for a short sale. They don't just do it on their own without that. So chances are, depending on what type of a short sale, we'll do another presentation as we start to see the moratoriums slow down. I think what's going to start happening is we're going to start seeing a lot more of these foreclosures and short sales. Our next presentation that we're going to have with your office is we're going to talk about the details of a short sale, and that's going to be part of that presentation, and how to deal with that. But more importantly, the lender will always do one or multiple, depending on the amount of time the short sale transaction takes, one or multiple BPOs or appraisals, and they usually only activate or request they'll only make a request once there's a short sale, and depending on the type of loan that it is, they might end up doing it where they say we'll do it at the beginning. If it's a conventional, right, we'll do it once an offer comes in. Sometimes they'll do it if some of the short sale negotiations and the processes are dictated by the different government agencies. So you'll have different types of short sales. They're not all the same. So some of them might be activated. They might activate it when an offer comes in. Some of them they might activate before the offer comes in, and the lender might request for a BPO or an appraisal before that. So that's why there's no one answer for that.
Another question?
Sure, go ahead.
So what is the landscape currently as far as buyers? Is cash still the king that it was many moons, or not?
Yeah, but still cash, only because short sale transactions are difficult in the sense of, I'm not saying difficult that they can't be done. Listen, we close them every week, every day, right? It's not that they can't be done. But what ends up happening is you have, in a regular transaction, you have a buyer and a seller, right? And then you might have an attorney representing buyer, an attorney representing the seller. So you might have 2 to 4 people in a negotiation process. Well, now add another 2 or 3 entities in a short sale transaction. Why do I say 2 or 3 entities, not one? It's because you might have one mortgage, but there might be private mortgage insurance, which you have to negotiate with the private mortgage insurance. Then there's also the investor, the person, the entity that put out the money. And then there's a servicer. So the first line of defense we get to speak to is a servicer, but the servicer has to go back to when negotiating the short sale to the private mortgage insurance company to see if they'll accept that, and also the investor. So now you're adding 3 other layers of negotiations into the mix. So it does make the transaction a little bit more difficult. Again, at the same token, they're not impossible. So that's why we say that cash is best. Why? Because it could extend the amount of time. There's not, the only thing we joke about this, the only thing that's short about a short sale is the amount of money that the bank receives. Time-wise, there's nothing short about a short sale. We've seen short sales that are done in 1 month, and then there's short sales that have taken 3 years. We're closing one tomorrow that started 3 years ago because SLS is going to get out of their own way. Again, it had 3 different entities involved in the transaction. This was exactly the situation where they had a mortgage insurance company who did not want to play ball for 2 years. And then finally realized that, well, we better do something or else we're going to lose the property completely. So I hope that was a long answer to a short question. So I hope that answers your question.
So guys, we really appreciate the time and effort and energy that you brought to us today. A lot of really, really great information. I just want to go on record one last time, kind of bookending this conversation, reminding everybody on this call that in our offices, we do have a policy that says you can certainly be a listing agent on a short sale. However, unless you fit certain criteria, which if you're curious about that criteria, you can see me afterwards. You are not able to be the point person with the bank. You need to go to a third-party short sale negotiator or an attorney who has experience in that arena, which, by the way, not all attorneys do, right? Ariane is one of those attorneys that does. Just because you have an attorney involved does not mean that they know what they're doing. And so we set those rules in place for you, for your clients, for you and your clients to make sure that these short sales are being properly processed. The reason that short sales got such a bad rap in the 2008 to 2012 period of time is because everyone and their sister thought they knew how to do it. And you would get to a spot where everything would just stop. And the banks were so overloaded that if you weren't doing it right, they would just push you aside. And so you had this whole experience with short sales that didn't really need to be in place, be experienced, in my opinion. So just remember, we set up rules inside to help you help your clients, and that means reaching out to third parties who do this, involving attorneys who know how to do this, not just you trying to figure it out, being on the phone with the bank. So again, if you want to know what those criteria are in order to set yourself up to do that yourself, see me afterwards. The answer is experience and education, and not a small amount of it. So it's almost, to me, it's almost more relevant for you to kind of refer that business to a short sale negotiator and or an attorney, and in many cases both, to get that part of the job done.
Yeah, thank you, Rick. I can't second that enough. I can't say enough about that. Absolutely. That's why we have both a negotiator and an attorney on every file. Yeah, absolutely. And listen, we've been doing this for 15 years, and we still make sure that we have an attorney for every single file to protect everyone involved in the transaction. Thank you. Beautiful. And thank you for having us, Rick. Really appreciate that.
Yeah, no worries. We're thrilled that you were here. We're excited to have you back for that kind of part 2. And with that, we bid everyone a good afternoon. For those of you coming to Ignite, that starts at 4 o'clock. For everyone else, Bogdan, make sure that we have the contact information for everybody. Okay, great. And we'll get that out to you. Thanks, guys.
Bye-bye.
Thank you very much. Thank you.
Thank you. Bye.
Thank you.
Bye.